If you've been watching the markets in 2025, then you already know something's off. Sure, unemployment's low and the stock market's up, but talk to any business owner, any investor, or even the guy running your local dealership, and there's a different story. Money's tighter, and that's because the economic headlines are lying to you. What you're seeing isn't recovery, it's recalibration. And in the middle of this mess, luxury watches have been quietly outperforming the noise. Not as a flex, but as a store of value, a vehicle for mobility, a signal of access. Because here's the biggest lie you're being told, that markets drive everything. They don't. When you're dealing with high net worth individuals, the type of clients I work with daily, the game isn't just about growth. It's about control, liquidity, privacy, and above all else, it's about leverage. Watches operate on a completely different timeline than the economy. They aren't tied to inflation numbers, interest rate hikes, or job reports. They're tied to scarcity, demand, and reputation. That's why Rolex doesn't dip just because the Dow does. It holds or climbs because value in this world isn't measured in basis points. It's measured in attention and access. And that leads me to something most people miss entirely. If you're holding real capital right now and watching the world zigzag between hype cycles and fear, you need an edge. I work privately with individuals who aren't just buying watches. They're positioning wealth, quietly, intelligently, and more importantly, with strategy baked in. I open a few private call slots each month for qualified clients who want to build real leverage with their luxury watches. If that's you, then the link's in the description. Now let me show you the smart tactics Rolex and AP use to ensure the luxury watch market keeps thriving. You see, watches don't respond to GDP. They respond to gatekeepers. Production isn't ramped up just because demand is. Rolex isn't flooding the market. AP isn't adjusting prices for inflation. These brands run on heritage, exclusivity, and slow release schedules. On purpose, which means the supply is fixed. While demand fluctuates with emotion, culture, and status, it's why a discontinued Patek with history will outperform 5 hot tech stocks that were overfunded and overhyped. It's simple. It's about long-term desirability. And if you understand how that desirability moves across geographies, cultures, and classes, that's when you stop buying watches and start acquiring leverage. Let me give you an example. Let's say you're holding $75,000 in equities right now. Solid mix. Some growth, some blue chips, but you want out. You see a better play. You can't just snap your fingers and move that cash. You're locked in the trading windows, fees, taxes, timing. Now imagine instead you're holding an 18-karat gold Skydweller. You've got a piece that moves across borders. No capital controls, no financial disclosures, just a watch, a handshake, and a wire. I've seen six-figure trades go down in less than an hour. I've seen watches traded for real estate deposits, rare art, even equity in a startup. That's the kind of liquidity Wall Street can't offer you. And when the economy gets choppy, speed and discretion win. But even more important than liquidity is reputation. People think investing is about spreadsheets, but in my world, the real returns come from what your assets signal. You walk into a room wearing a platinum day date, people take notice. You don't have to say a word and the right people know exactly what kind of player you are, because you're wearing something that speaks fluent high net worth. I've had clients tell me point blank, the only reason they got the opportunity for a deal or built a new relationship was simply because of the piece they had on their wrist. Because when you're wearing the right watch, you're not just dressing for success, you're accessing it. So if you're not just looking to play it safe, but for strategic positioning, if you want capital that's mobile, discreet, and recession resilient, and if you want an asset that earns its keep even when the headlines don't, this is your move. I don't work with everyone, but I do open a few call slots each month for serious clients who want to deploy capital the smart way. If that's you, the link's in the description. Let's talk strategy, let's talk timing, and let's make your next move your most powerful one yet.